Okay, so let's get right into the first of our little mini video essays. So in this first segment here, I'm going to set the table and talk about the sentiment picture, the way things look. We're going to reference some data points here, and we're going to maybe talk about what are some of the drivers of this general feeling of skepticism that investors have. Now, before I jump into this, I am going to start with this quote from Peter Lynch, which says that bull markets, a bull market is a positive market, are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And from what I can see here is we are definitely in the skeptical phase. And that's not just from my anecdotal experience of the questions that we've been hearing from clients. That's also, if we look at some more quantitative data, you can look at the AAII survey, which shows that despite the fact that markets have been at record highs, there are more investors who are negative on the markets in the next 6 months than are positive on the markets in the next 6 months. This is really quite extraordinary. And I would also point to the anecdotal experience of some of my research providers. I would point out that these comments have been especially strong from Fundstrat and Tom Lee. They were reporting, when they talked to their institutional clients, that there was a huge degree of skepticism, and they would almost classify it as hate about the rally. And that again is very unusual, just given the fact that markets are at or above all-time highs. Now, what are perhaps some of the drivers here? I think some of this has to do with the fact is that there are individuals out there, not necessarily amongst our clients, but in the population at large, that perhaps had sold out during the tariff terror in April, or perhaps have missed the rally missed the rally here year to date. So maybe that is causing some anger, maybe that's causing some cognitive dissonance. Again, I want to be candid. I also want to be sensitive to the fact that these can be trying times, and that I'm just, again, here simply providing observation. Another driver potentially could be that you've got a bit of a Trump effect happening. We have a very different leadership style in Washington, D.C. than we've been used to over the last 4 years, and that is unsettling to some. Also, I think maybe, and this is perhaps contributed to for lots of different reasons, but there's been a lot of punditry, a lot of commentary about how we are potentially in an AI bubble, about how valuations are way beyond done, or way beyond high. We're about to head into a recession, that inflation is going to rear its ugly head again. There's been a lot of concerns or fears raised here in the financial commentary sections, both on X and as I've noticed in mainstream media. So I think a lot of those things are driving a general atmosphere of skepticism. And again, this is just a blanket observation. And again, I'm not speaking to anybody in particular or about anybody in particular, just a general observation of the environment. So that's where we stand in terms of the environment. There's a great degree of skepticism. We can see it through the anecdotal experience, both myself personally, we can see it through some quantitative sources, and we can see it through the anecdotal experience of experienced research houses that serve both institutional and individual clients. So we'll wrap this part up and we'll move on to our next segment.